Good morning and welcome to another pre-market report by the Option School. This is your friend Pradeep Singla. In this channel, we talk about option trading strategies, and option trading adjustments. So yesterday we had another expiry. I'll say a very killer expiry wherein the markets went up like anything beyond expectations. Whatever levels we were also thinking, it was almost 30-40 points beyond that. So 17,200 was supposed to be the maximum hurdle, but markets went up to as high as 17,000, I think 240, 250, and ultimately we have had an expiry at around 17,234. Definitely, if market at all-time high is moving further higher on expiry levels, it's not easy to trade these kind of markets. Today, let's see what's happening. SGX indicating a slightly positive start to the markets, although maybe half an hour before it was slightly negative. Now it's showing 30 points, 31 points plus. In fact, if it's showing 31 points plus, that means we can open negative, because most of the time whatever SGX Nifty is showing, we are not following uh, those kind of starts in the market. Asian markets are mixed. Europe closed mildly positive. US markets closed positive, and Dow future is flat. So yesterday our positive markets are similarly reflected in European and US markets also, but Dow future now indicating a flat move. So that means okay, our markets can also remain flat to an extent. And obviously our markets close at another all-time high levels. It's really difficult to imagine that who is buying at these levels, and why they are buying at this level, because valuations do not match at all. So there can be a good amount of short covering, there can be a good amount of manipulations. Sometimes IT sector is taken, sometimes Reliance is taken. So in all the process, whatever is happening is markets are uh, doing a mad bullish moves, which are to an extent we can say not very justified. But then market is market. Whatever is happening in the market is supreme. We have to go with that, right? FIs are net buyers in cash were 348 crores, and DIs were also net buyers 381 crores. So since both of them were buyers, obviously markets have to go up only. FIs were net sellers was 1228 crore in index futures, and sellers were 338 crores in index options. So index options selling generally indicate that okay, they will not be doing huge amount of there should not be huge amount of fluctuations in the market, but let's see that. So this is the fourth consecutive day when FIs are buyers in cash. So can we say that okay, they have turned buyers from sellers? That is something we need to check, because whatever buying they are doing, this is a small buying. So 348 crore is nothing. So we can one fine day find that okay, they have done around 3000 crores in cash, right? So although they are definitely buyers, but what is happening is because of their buying, even if it is a small buying, markets it's helping markets to go unidirectionally on upside also. So only thing that is working in this market is every morning just buy a call option, and by evening you will have profit and scare it off. Sometimes the implied volatility goes up, so selling put option may not work. But now what we are finding is that okay, there is a decent amount of decay happening, which is a better thing than what was there on Monday and Tuesday. But from Wednesday, Thursday, decent amount of decay is also there. VIX is not increasing much, right? So VIX on in fact on Wednesday VIX has gone down. Yesterday it was very flat, like not neither going up nor going down. But on expiry day, market closing at around 150 points plus is a really challenging expiry day. After so many days, we have seen this kind of a expiry where markets are extremely unidirectional. I will not say volatile. Right from the beginning, it never went down. It was always up, and last half an hour, I think it has gone up almost 30-40 points too far away, beyond 17,200. Hopefully, these kind of moves get erased today. So maybe those 30-40 points which it has gone beyond 17,200 should come down by at least those 30-40 points, hopefully. Let's see OI analysis quickly. All of you who are new to the channel, please go ahead and click on the subscribe button. And all of you who are already part of the family, you can click on the like button, please. The highest OI on call side, if you see, is 18,000. On put side, it is 16,500. Now, this is basically, although 16,500 and 18,000 do not have much value, but maybe these may be used for basically buying, because you need some margins and you buy in addition to selling. Obviously, the margin requirements are less, but highest open interest as of now is 18,000 and 16,500. They are used for buying. Second highest open interest stands at 17,500 and 17,000 put. So 17,500 and 17,000 uh, put is what is a real, I'll say, highest open interest. So this says that okay, the market has a range of this 500 points at least for uh, this week. Uh, Morning, Mr. Rajiv. Morning, Mr. Riyaz says Bank Nifty rally is pending. Nowadays I feel okay. Nifty is behaving like Bank Nifty, and Bank Nifty is behaving like Nifty. You can say yes, a few hundred points in Bank Nifty. It will also touch its all-time high. So not much is left in Bank Nifty rally also, right? So anytime you can have 37,000, 37,200, 300 type. So even that is done away. But the main point is the way Nifty is moving. It is becoming much more volatile than Bank Nifty, right? Instead of trying to predict, it is always better to play along the market. That is always true. That's always true. It's always better to be with the market rather than against the market, right? Unemployment data is there, yes, but you see, market is not taking any bad news into consideration. So only consideration is that okay, they need to go up, and some point in time this should also stop. OI and COI calculations indicate a level of approximately 17,275, and we had an expiry at a level of, I think, 17,234 or so. Now data needs to build up. So today we are giving all these indications based on very thin data, and port side selling is very heavy, close to at the money, like you can say 17,200, 100, even 17,000. Huge amount of writing has happened yesterday also for this new series. But on call side, the change in open interest is very, very less. Obviously so, because what is happening in markets is markets are moving in upward direction also. So obviously most of the people are participating by selling puts rather than by selling calls. Sorry. Nifty levels, if you see on upside, initial resistances can be at 17,340 and 370. See, the levels are also changing based on OI analysis. Levels are also changing, although it's an open sky now, so anything can happen. But yes, definitely 17,350, 340 and 370 are the levels to watch for. On downside, initial supports stand at 17,120 and 17,075, and straddle premium is 230. So that means from 17,000 to 250 it can go 230 points up, 230 points down. So 17,000 and 17,500 is the range set for this expiry, and somewhere this mad rush needs to stop. When will it stop is anybody's guess, because if a lot of buying is done at these levels, I don't know, like what is the thought process behind that? That okay, somebody is doing buying at all-time high levels, and ultimately, when will this deep-pocketed guys book profit? So there must be a mix of whatever they are doing in cash and whatever they are doing in F&O, so that ultimately, even if the market may not go to higher levels, they are still into profit. So at some point in time, definitely a big fall is due. When will it happen is anybody's guess, and obviously, whenever it will happen, it is not going to give any big opportunities, because it will be starting with a gap down only. Weekly pair as of now, 17,000 and 17,500 is 67 rupees, which is a good pair. And if you can handle some kind of fluctuations, they should start giving money, because IVs are also decently good. And 67 rupees at 500 points gap on a weekly option is a good pair. So I'm not suggesting this trade, but only in case you can handle the fluctuations, the swings in the market, and this can be one of the pairs which can be uh, traded. All the best, and be cautious uh, to maximum extent in these kind of markets if you are into option selling. Right, if you want to join any of our memberships, you can click on the join button. There's a link given in the description. Also, we have 3 recorded workshops: iron condor, short triangle cover call, butterfly, iron butterfly. These are videos, and if you want to see these videos, you can contact us on the number given on the screen. We have a 2 days workshop on 4th and 5th of September where we'll be talking about a lot of strategies and their adjustments. All the material will also be shared, and a lot of back testing will be shown. So for this, you can contact on the number shown on the screen. For during market interactions, you can contact us on our Twitter handle. You can follow us on our Twitter handle at the rate the option school, or you can contact us on any of these numbers. You can write to us at info at the rate the option school dot in. What Mr. Rajiv is saying, Sunny says channel theory suggests that we are at the top of the channel waiting for reversal confirmation. Uh, you see, most of the theories hope some of the theories will work, some of the theories will not work. All the theories, all the thumb rules do not work all the time, right? So as of now, what is happening is market is not following any of the theories. It's going like a mad elephant in one direction only, right? Hopefully something will work, and let's say, so if that channel theory is helping, that's really good. So you can try to control things through that also. Most of the theories, Bollinger Bands, channel theories, everything is saying we are at the top, but then market makes a new top, right? So all those things should be right, not 100% of times, but yes, majority of times, right? So click on the like button and share this video to somebody to whom you think it will be useful. Write your comments, suggestions, feedback, anything you want to write on comment section, any trades you want to ask. And if you're not subscribed to the channel, please go ahead and click on the subscribe button. And today we are starting with the new series, right? Only request is that, okay, keep your positions still light, because since markets are moving up very fast, it is obvious that, okay, most of the traders will keep on selling more puts. So whenever the markets will go down, it will be without giving any opportunity to square off the positions or adjust the positions. So we should not be very aggressive on put writing. That can be dangerous, because anytime that is due, because all the theories are saying that, right? But let's see, till that time, do safe trades. Maybe very well hedged trades will work better, or keep your position size as light as possible till the time market gets into a stable mode. Have a good profitable day. Thank you for joining.